Home ownership has always been a huge part of the American dream. It's always been a big part of mine anyway. The days before I was able to purchase my own home, I just woke up every day with an anxious pit in my stomach because it was so important to me. That made me work that much harder until I was able to finally afford my first property back in 2016. But a lot has changed since 2016, of course. I'm well aware of that. But that's why it also pains me to see that a recent Redfin survey said that 1 in every 5 millennials says that they think that they will never be able to own a home. But I'm here to share with you 4 ways that you can start as a first-time home buyer, even in this market, as home affordability is in a crisis mode and mortgage rates are at like 25-year highs. And no, this is not going to include tips about cutting down on the Starbucks and the avocado toast, although I do have my own feelings on that. What is up, everybody? Welcome back to the channel. If you didn't already know, my name is Jay Costa. I'm a real estate agent, investor, and builder here in Northern New Jersey. And if you get value out of this video, please smash that like button down below. It truly helps me out. And also consider subscribing. We are building a tight-knit community here of like-minded individuals looking to build wealth in real estate, whether that's being a real estate investor or just with general home ownership, part of that American dream I was talking about. So if that interests you, definitely check out my previous videos. I'll put a playlist link in the top corner here as well as in the description box down below. As I said, home affordability is in a crisis mode. Mortgage rates are like almost 8% at this point. Inflation's eating away all of our checkbooks, and we have like economic uncertainty here that's hanging over all of our heads, whether you want to admit it or not. So it's no wonder why many are finding that American dream of home ownership to be more and more unattainable by the day. But in this video, I'm going to share with you my 4 main tips in this market to get started as a first-time home buyer. That way you could start paying off your own mortgage instead of somebody else's. Let me start off by saying first that home ownership is not for everybody. Before buying a home, you may want to ask yourself these few questions. First, do you need or even desire the flexibility of location that renting provides to you? If you need flexibility of location, if you want to be able to move as you please, homeownership won't be for you, because once you get a mortgage, you pretty much have to stay there. Whether you're looking to travel or if it's for job purposes, if you need the flexibility of moving, renting provides flexibility that homeownership simply does not. Also consider what your time frame of ownership is. If you only want to own a home for a couple years, do yourself a favor, don't do it. Because that leaves yourself up to fluctuations in the market where you could get hurt. Only consider home ownership if you're gonna plan on owning that home for at least 5 years, at least, probably more like 7 to 10, honestly, in this sort of market. That way, if you buy it and for whatever reason, you're the unluckiest person in the world and home values and the value of your home drop substantially the day after, you know you could just wait it out. You could wait it out 7 to 10 years and 95% of the time you'll be okay. You also should reconsider if you actually really truly want to own a home. Are you single? Do you need all of that space? Do you want to deal with cutting grass, raking leaves, as well as most importantly, dealing with the unforeseen costs that are just simply a part of home ownership of unexpected repairs? One of the biggest positives about renting is that you're not responsible for any repairs on the property because it's not your property. But when you own the home yourself, you're responsible, obviously, to make any repairs that you need. So if you need a new roof, you need new utilities, the heat goes bad in the middle of the winter, that's on you. So I would not suggest purchasing a home unless you're able and willing and have the money saved up to cover these unforeseen, usually, because it usually happens in the worst possible time, right? Unforeseen expenses. And rent until you have that saved up. If you still want to be a homeowner, my number 1 tip in order to buy your first property in this market would be to start with an investment. Now, you could do this 2 ways in my estimation. First, you could still live where you are, rent where you are in like a high cost of living area, if that's the case, but find a property outside of your area, not too far. That way you could still take a look at it and not have to trust other people and management companies to handle it, but buy a piece of property an hour away that's much more affordable. Fix it up if you need to and rent it out. This allows you to stay as a renter in that high cost of living area, presumably closer to your job and things like that, while also benefiting from all of the benefits of being a homeowner, like the tax benefits, as well as while you pay down the mortgage and hopefully the value of the property goes up, you build equity in the property. This is how you build wealth in real estate. The second way to start off with an investment as a first-time home buyer, and this is the biggest thing that I'm surprised about in this market that you don't see more of. This is what's called house hacking. House hacking is when you go to buy not a single family home, but a multi-family home, like a 2-family home. Buy that piece of property, you live in one unit, and you rent out the other. Now, since this is not an investment property per se, it's actually a personal residence, you're able to qualify for an FHA loan. And an FHA loan only requires 3.5% down payment. So like I said, you live in one unit, you rent out the other, and hopefully the rent from that second unit covers a lot of your living expenses while you build wealth and pay down that mortgage. In addition to qualifying for an FHA loan with that low 3.5% down payment, you're also able to qualify for a higher pre-approval amount with your lender most of the time because they're able to take the potential rental income from the second unit and use that as qualifying income on the loan. So maybe you don't want to be a landlord, but another tip I have for you if you want to be a first-time home buyer is to reconsider the location that you're looking at. If you already live in a high cost of living area like so many of us do, don't think that you're stuck there. Look in surrounding areas that, yes, may be a bit more of a commute to your job in the city, presumably, but have way more affordable and attainable home prices. Listen, I get it. I grew up my whole life right outside of Manhattan. My whole family is still here, and sometimes I feel stuck here as well. But if I ever found myself in a situation where I needed to cut costs and cut expenses, I'd have to start looking in other areas in order to afford what I'm looking for. Don't let the additional commute dissuade you either, especially if you already live in or near a city where basically there's traffic as I see it all the time anyway. Even if it's an extra 45-minute added to your commute. Okay, you're coming from 45 minutes away, but once you get into wherever you're trying to go, a city or whatever, it could be another hour, 2 hours while you were already in the city. So to me, for an additional 45 minutes, if you're gonna be sitting in traffic anyway, is definitely worth the trade-off for peace of mind and comfort. My third tip to all of you potential first-time homebuyers is to reconsider the style of property that you're looking at. You may think that you want or need a single-family home with a big backyard, but like I said, the upkeep on these properties is pretty substantial and expensive. Consider both condos and townhouses because generally they're way more affordable, and also they have HOAs where you pay an HOA fee, and basically the HOA takes care of maintaining the exterior of the property for you. Consider it somewhere in between, like a middleman between renting and owning a single family home all on your own. Usually condos and townhouses are more affordable, like I said, and also they're in generally more densely populated areas where walkability and public transportation and things like that are more accessible, where you may not even need a car. So if you're looking for stress-free while still owning property, real estate, look into condos and townhouses for sure. My fourth and last tip to all of you potential first-time homebuyers out there is to consider different styles of ownership. For instance, you can team up with another buyer to purchase a property. This could be a family member or a friend that you know and trust. I would only recommend picking someone that you know and trust for a very long time. I wouldn't go on Craigslist and say, hey, let's go buy a property together. That sounds like a recipe for disaster. You could see them as your roommate short term, and I would see it strictly as an investment. But I would also definitely get a lawyer involved of some sort where there's some sort of agreement for when one of you or both of you wants to move out or one of you or both of you wants to sell the property. I know all these tips may not be exactly what you're looking for as the prototypical American dream, but you can either keep bitching and complaining about the market and the cost of everything, or you can actually do something about it to get your foot in the door at least to that home ownership and start your real estate journey. Because whether or not you're looking to buy a single family home for you and your family, or you're just looking as a single guy or gal to get started as a real estate investor, all of these ways, all of these methods will help you get that foot in the door. That way you can start building equity in real estate and get closer to that American dream goal, whatever that may be. That is it for today, guys. Thank you so much, as always, for tuning in. Drop a comment in the comment section down below. Let me know what you think about these methods. Have you used any of them? Are you thinking about using any of them? Also, let me know what you think about the housing market in general, because like I said, we have a lot of uncertainty right now, and I would like to hear your guys' opinions on where we go from here, and let me know what your plans are and what you're doing heading into 2024. As always, appreciate you tuning in, and I will see you next time.